Welcome to Barron's Roundtable, where we get behind the headlines and prepare you for the week ahead. I'm Jack Otter. Coming up, the Federal Reserve's final meeting of the year is just days away, and investors are expecting a third rate cut. But Apollo's Torsten Slok says to expect rates to stay higher for longer. He'll share his 2025 outlook. And later, Barron's is out with our list of top stock picks for 2025. We'll take a look at which companies made the cut. But we begin with our expert panel and three things investors ought to be thinking about right now. On the Barron's Roundtable, my colleagues Jack Howe, Megan Leonard, and Andrew Berry. So, Jack, the S&P and Dow were down a little bit on the week. The NASDAQ eked out a gain. What was on traders' minds?
Well, the stocks are still up massively for the year, so maybe just call it taking a breather. We did get some big stock declines after financial results from Oracle and Adobe, but there was also a big gain for Broadcom. So to me, it's not a clear trend there. Alphabet had a huge week. That was after announcing a quantum computing breakthrough. And we got some inline inflation numbers. That makes a rate cut from the Fed seem likely in the week ahead.
I think actually traders are pricing in somewhere in the 97% odds for a rate cut. But keep in mind, we're going to get that cut, and then we'll probably be on pause for a bit.
Let's go back to the quantum thing, Jack.
Yeah.
That's been a red-hot area. What's going on?
This was an embarrassing week to be a supercomputer. Google said it has a new chip called Willow that can perform this benchmark calculation in less than 5 minutes that would take today's fastest supercomputers length of time longer than the age of the universe. That is a dunk, in-your-face supercomputers. So one day these types of quantum computers like Willow could lead to drug breakthroughs, or maybe they'll lead to battles over data encryption. But for now, what they're doing is mostly making stocks go up. Google went up 5% both Tuesday and Wednesday. If you own anything with the word quantum in the name, you're probably doing pretty well right now. Quantum computing up 584%. D-Wave Quantum up 344%. Doesn't even really need quantum in the name. There's a company out there called Rigetti. It sounds like a tomato sauce brand, but it's a computing company. That one's up 547% year to date. And of course, there are also exchange-traded funds. One's called Defiance Quantum ETF.
Aren't these pretty small companies, most of them?
Most of them, and not yet profitable, yeah.
I called Apple. I tried to order a quantum MacBook. They said it's not quite there yet.
Yeah, I'd say in the cycle where at least 5 years too early for the free cash flows and probably 5 weeks too late for the best stock gains, but we'll see what happens.
All right, sticking with tech, Andrew, there have been predictions that the Mag 7 would be ceding its leadership to the rest of the 493. That day is not here yet.
No, not here. It's been a Mag 7 market for this entire year. You saw new highs in many of those 7 stocks. This week. I mean, Apple, Microsoft, the NVIDIA, and others are really doing very well. That group of 7 is up about 70% on average this year. It's accounted for most of the gains in the S&P 500. You know, NVIDIA's almost tripled this year.
So what is your favorite Mag 7 stock?
Well, I mean, I'd point to Meta, which is benefiting from the AI trend. It's trading for about 25 times next year's earnings. I think Alphabet still looks good. And NVIDIA is trading for about 30 times next year's earnings. Its earnings are going to ratchet up maybe by 50% next year after a doubling this year. Tay Kim, who works on our staff, just did a book on the company. He highlights just how well run this company is.
Okay, we'll talk a little bit more about Alphabet with you later. But for now, Megan, investment bankers are licking their chops. They see a big year for M&A next year.
They do, but they might need to hold their horses because this week was not great. Good news, not so great news. It was a difficult week for the Kroger-Albertson deal. Remember that's been going on for a bit. Federal judge said no dice, and unfortunately, that just has fallen apart. We have seen Albertsons actually sue Kroger. The deal is officially off, and even additionally to that particular deal, the U.S. Steel deal might be actually in jeopardy as well. Biden administration may actually put a little bit of a block on that too. So not a great week on the mergers and acquisitions, but good news ahead. We do see a lot of activity, a real enthusiasm when the Trump administration takes office. There is set to be potentially some less regulatory oversight there. Sectors like energy, media, and even the bank sector might actually do very well. Tech, on the other hand, may have less of a bonanza. So, we do have J.D. Vance, for example, has been in actually lockstep with the current FTC Commissioner, Lena Khan. She's out. And so that may ease things up, but probably not for tech.
Yeah, I mean, one play on it would be Goldman Sachs, which is the leading merger advisor. It's been one of the strongest of the big bank stocks this year. And David Solomon's been very optimistic about the outlook.
It's interesting in terms of strange bedfellows. The Trump administration has also been negative on that U.S. steel deal, so I don't think that's going to happen.
It isn't, but it is something that is kind of interesting because we're going to maybe see that Capital One and Discover deal take place. So that actually was announced in February. It's been on a little bit of an ice at this point, under review, but we may actually see a little bit of movement there, and that combined entity could actually be a big competitor for the American Expresses of the world. So keep an eye on that one. I think that's a good bet for investors.
Yeah, and you were seeing the arbitrage spread on that deal tighten up, which signals investors are more confident that deal may happen.
It really should. There's a lot of disruption in that industry. It's not as if it's only credit cards. We'll also, I suspect, see a lot of action in the media industry.
Definitely. We have already started to see people lining up. You saw Comcast making some moves. I think we'll see other things where we may actually see some spin-offs in that particular space. Private equity, also a big player there. We can actually see a lot of different types of activity over that next year.
There's a lot of subscale players that need to get bought.
Absolutely.
All righty. Thanks, guys.